HR issues can kill you. One complaint against your company can turn your world upside down. And you spend way too much time dealing with HR when you should be spending your time on making a profit. You should talk to Bambi. With Bambi, get access to your own dedicated US-based HR manager starting at just $99 per month. They get to know you and your business while providing HR expertise and the personal touch you need and want. They're available by phone, email, and real-time chat, so onboarding and terminations run smoothly. Team members reach peak performance, and your business stays compliant with changing HR regulations. And with Bambi's HR Autopilot, you'll automate important HR practices like setting policies, training, and feedback. HR managers can easily cost $80,000 a year, but Bambi starts at $99 per month. Schedule your free conversation today to see how much Bambi can take off your plate. Go to Bambi.com right now and type in Accelerate under podcast when you sign up. It'll really help the show. Spelled BAM, BEE.com. Bambi.com. Type in Accelerate.
Me, but also you. The Pharaoh fast forwards his favorite foreign film, Powder Donut. Okay, what's my line?
The only line I see here on the script is get options based on your budget with the Name Your Price tool from Progressive.
Oh man, that's a tongue twister, huh? I'm sorry, I'm gonna need a few more minutes. Bulbous Walrus, the Bulbous Walrus.
The Name Your Price tool, only from Progressive.
The owl ran afoul of the comatose coxswain.
Progressive Casualty Insurance Company and affiliates. Price and coverage match limited by state law.
Welcome to Accelerate Your Business Growth with your host, Diane Helbig. Diane is a leading small business development and leadership coach, author, and speaker who is passionate about sharing valuable ideas, tips, and techniques with business professionals worldwide. Diane brings you the world's experts and gurus in all things business, whether it's sales, structure, social media, planning, or plateauing. Guests bring their expertise and energy to each episode. When growing your business is your focus, Accelerate Your Business Growth is the show to listen to. Got a topic or guest suggestion? Let Diane know. The goal is to make sure you have the information you need to move your business forward. Thanks for joining us. Settle in and enjoy.
Hello, everybody. Thank you for joining us. Today's podcast is sponsored by Audible.com and Ring Boost. Audible.com is a leading provider of spoken audio entertainment and information. Listen to audiobooks whenever and wherever you want. Get a free book when you sign up for a 30-day free trial at audibletrial.com/businessgrowth. Memorable phone numbers are a unique and affordable brand asset. Call 877-RING-BOOST or visit ringboost.com to get yours today. Accelerate Your Business Growth podcast continues to gain recognition as a wonderful resource for small business owners, aspiring entrepreneurs, sales professionals, business leaders, and that is because of the guests who join me. These are folks who have expertise in certain areas of business, and they give of their time and their knowledge so that you, the listener, can take what you need and put it into your business and hopefully be more successful and happier and doing great things. Today is no exception. Today my guest is Daryl Esch. Daryl is PayPal's Vice President and General Manager of SMB Lending. In his role, Daryl is responsible for PayPal's global financing solutions team and is a key driver for setting and executing PayPal's SMB lending activities. He joined PayPal in August 2010 from Bank of America, previously serving as Senior Vice President of its Payments Department. Thanks so much for joining me today, Daryl.
It's my pleasure, Diane.
I am happy to have you with me. We're going to be talking about what's been going on in the economy since 2008, since this great recession. And I am curious from your perspective, from your point of view, what was the impact of what we call the Great Recession on business growth and on economics in general?
Yeah, well, for starters, for small businesses, one of the real impacts was the loss of funding opportunities from traditional sources. So funding from the traditional banks dried up, tightened up a lot. It became a lot harder for small businesses to get access to the funding they needed to run their business. I think since the Great Recession, what we've seen is the large commercial lending, large enterprises have been able to secure funding they need from the traditional banks, but the lending to the small businesses, those littler guys who are fueling the economy, driving the economy, really have a harder time getting access to the funds they need to grow their business.
And is that, I mean, from what I remember when that all happened, it was like all of these lending institutions, these traditional lending institutions said, you have to be able to show, 2 years of profit and all of these things that nobody could. I mean, I guess the big guys could, even though I imagine that was somewhat challenging, but it really feels like it really put a strain on small business. Was small business more affected by it than large enterprises?
Small business was, yes, clearly more impacted, and hasn't really bounced back to its pre-recession levels of lending for small businesses. And a lot of what you've seen is with those smaller transaction sizes, say a $50,000 loan or a $20,000 loan, it really just became harder for the banks when the loss levels increased in those 2007, 8, 9 kind of years to continue to afford what it actually takes to do the underwriting. And then so what you see existing still where the smaller business loans are, frequently what you have is really the owner is being underwritten as a consumer as opposed to the business itself. Because again, to your point, it takes a lot to actually go through that underwriting process to judge the health of a business. And for a $10,000, $20,000, $30,000 loan, it just becomes cost prohibitive in many cases.
I see. And is it that smaller businesses need smaller loans? I mean, that feels like to me like smaller businesses don't necessarily need the 500,000. I imagine some of them do, but is that part of the challenge?
Right. That's right. Overwhelming majority of small businesses in America and around the world are doing less than $1 million of sales per year. It's frequently a family kind of business with maybe 1 or 2 employees or a small number of employees, and doing in the hundreds of thousands or tens of thousands in some cases even of sales. So they've got business doing $500,000 in annual sales frequently isn't going to have any need or justification for one of those $500,000 loans like a larger enterprise might.
Got it. Okay, and this may sound like a really strange question, but what does a small business need a loan for? Is it equipment? Is it capital? Is it a build out? Is it to float payroll, or any of the above?
Yeah, any and all of the above. And what we see with our program at PayPal is more frequently than not, what the business owners tell us they're using the funds for is inventory. That's the most common use of the funds, is simply buying inventory. And you have cases where smaller businesses in particular, they may get buying opportunities that come around unexpectedly. A supplier may have a closeout on something, or a new run of merchandise might be available that the business owner wants to try and sell, and they have to come up with the funding right away. And that's really that's the number one use. But then it goes to be all of those things that you mentioned. It might be they need a new vehicle for the business. It might they need to grow space or hire seasonal workers.
And is it the case that, like, I know that that when small business sells to big business, the terms are sometimes tremendously long. So that feels to me like they need to spend the money up front, because it's not like they're going to get paid quickly once they sell their product or service.
Sure, and that can be true with consumer. If you're a contractor and you're doing work on a home, you may put a lot of work into it before a payday arrives. But you're right. If you're selling business to business, business to commercial, you may end up waiting 30, 60, or even 90-day terms frequently. And for a small company, that being able to keep the business afloat in that period definitely is a period where you might need a capital infusion.
Okay. So it seems like there have arisen alternatives from our traditional bank, credit union sort of thing. Can you speak to what the financing options are today for a small business?
Sure. I think first and foremost, the small business owner tends to still rely on their personal funds, in some cases, family and friends. Historically, and what got us kind of into trouble a little bit, and why the small business lending space kind of had, in particular, such hard times in the 2008-9 kind of range, was people would use the equity in their homes. And so when 2006 and 7 came along and home prices crashed, you no longer had that ability to leverage your home for the funding that you would need to operate the business. So what's popped up as alternatives tend to be sort of cash advance programs that might be tied to a business's receivables. There are some short-term installment loans where you might make weekly payments. There are still, of course, credit cards out there. Those tend to still be underwritten largely on the individual, and they tend to involve individual debt. But there are traditional structured loans and cash advances available out there in the wild now that kind of come in to fill that need that still exists, that's not being served necessarily day in and day out by all the traditional banks. And again, more at the smaller ticket sizes. The banks are doing great once you're up above $100,000 transactions. It's really in those $20,000, $30,000, $40,000, $50,000 range where the need is greatest.
Are any of those alternatives tricky or potentially dangerous to the lender?
I think the borrower always needs to know and understand the terms and understand who they're dealing with, and what the terms of any given financing is going to be. Now, having said that, I think the business owners generally are making, when they have transparent terms and they understand what they're getting, they make good decisions because they know what the margins are going to be when they're selling something. They know what their markup is, and so long as they're understanding the cost of the credit, they can normally make a very well-informed decision whether taking advantage of some of these alternative borrowing opportunities is good for them or not.
Okay. And should they be concerned at all about tying their personal credit and debt to getting a loan for, or getting some sort of financing for their business?
Well, there are going to be opportunities out there in some cases. So we have a product called PayPal Working Capital that doesn't rely on personal credit bureaus. There's no personal guarantee associated with it. It's one of those programs where the merchant is effectively committing a portion of their future sales. So as they're selling things and we're processing, we're able to collect a repayment. And in that case, there's no connection to the individual's credit bureau, or nor are there personal guarantees on a product like that. There are clearly others out there, other programs and where personal guarantees are involved and personal credit checks are involved.
Okay. I have to take a quick sponsor break, but then I have a question for you about that.
Certainly.
Accelerate Your Business Growth podcast is happy to be sponsored by Audible.com and RingBoost. Audible.com is a leading provider of spoken digital audio entertainment and information. They have over 150,000 titles to choose from, and you can listen to them on any device, including whatever you're hearing us on right now. And if you sign up at our link, which is audibletrial.com/businessgrowth, you get one free audiobook and a 1-month trial of the service. Some examples of books you can listen to on audible.com are The Inside Track by Peter Sage and The Irresistible Consultant's Guide to Winning Clients by David A. Fields. So visit audibletrial.com/businessgrowth, explore the books that are of interest to you, and receive one free audiobook when you sign up for the trial. Did you know that phone calls convert to revenue at 10 to 15 times the rate of web forms, and 64% of consumers prefer to contact a business by phone? Increase advertising response rates and improve customer service with an unforgettable phone number. Ringboost.com has the largest selection of custom, local, and toll-free numbers in the country. Memorable phone numbers are a unique and affordable brand asset. Call 877-RING-BOOST or visit ringboost.com to get yours today. Today we're speaking with Daryl Esch of PayPal about the evolution of small business lending 10 years after the financial crisis. Daryl, can you go a little deeper with the PayPal Capital lending? When you said before the break, when you were talking about it and you said, as they sell, you are able to then be reimbursed. How does that work? Like, how do you, are their sales somehow then connected to something you can monitor, or does it just mean that then they have the money and they're able to do it?
Yeah, so PayPal Working Capital is a specific program that we launched about a little more than 5 years ago now, that it is for available to merchants who sell on the PayPal network. So if you're processing sales through PayPal, if PayPal is handling your sales, the way it works effectively is you log into your account, and because we have an established relationship where we know the seller and we know a lot about their business already, and we see the sales going through the account, we're able to make a credit decision based off of that information. And if the seller is approved, then the funds go directly into their PayPal account for immediate use. And that happens. That whole process is normally about on average somewhere in the 3 to 5 minutes, an application from application to funding process. So incredibly quick. And then as sales are coming through, as you're selling things using PayPal, as we would normally take that money and process it straight into your account, we're able to take a portion of it, and it's a very flexible program. The seller can determine within a range of how much we actually take, and it could be as low as 10% and as much as 30% of their daily sales until that loan is paid off.
Got it. That's incredible. And
that our customers think that as well.
I'll bet. I'll bet they do. I use PayPal, not tremendously, not a lot, but I see the banner about it and I think, boy, I wonder how that thing works. And now I know. So when the recession hit and we started going through all of this, and there were all these changes, was the finance rate that now companies pay on funds that they borrow, was that impacted as well? Has that changed?
Well, it depends on who the provider is. So, PayPal has a relationship with a bank, web bank in Utah, who is actually we're issuing these programs, the PayPal Working Capital program. It's a true business loan issued by an FDIC insured bank. And then so they, of course, as a bank, they have access to a funds window, and so treasury rates and so forth impact ultimately kind of a cost of funds that they would have. But it's different from from provider to provider, and some of the alternative lenders are using venture capital or private equity, and they probably all have a bit of a different cost structure.
Okay. Okay. So, do you think small business owners understand the landscape, the alternative funding landscape? Do you think they know what options are available to them?
I think more so now. I think the demand is so high, and it's been and the conditions have been relatively stable for the last several years, and that so if you weren't getting access to funding from a bank 5 years ago, unless your business has changed substantially, there's a good chance that you're not getting it today. Likewise, if you were getting it 5 years ago, there's a good chance you still are. And so I think most business owners will have learned that they have to be a little savvy and go out shopping online a little bit and use the internet as a resource to help them find and explore various alternatives.
Is there advice that you would give them, like things that they should look out for to make sure that they don't, because that's like the other side of the internet, right? That there's people out there who you really shouldn't trust, but how do you know who they are?
Yeah, so there is always something to be said with a trusted, respected brand, and one that you know and one that you know has been around, and so I think if it's a company that you're not familiar with, of course you should always apply some caution. And I think whether it's a company you're familiar with or not, you should make sure you look at the terms so you understand the actual cost of credit. And that's one of the things that we designed our programs in a way that we use a single fixed fee. So when you're borrowing the money, you know exactly what the cost of credit is going to be. We put it right there in front of you in dollars, and on PayPal Working Capital doesn't make a difference whether you pay us back faster than expected or slower than expected. Again, that's a product that's not a pay us this much every week or every month. That's a program where we take a percentage of your sales. So if your sales are low, we're getting repaid slower. If your sales are high, we're getting repaid faster. But the customers love the program so much because they know exactly what the cost of credit is. And just like they generally have a good idea of what the return is going to be on what they're using those funds for. So my advice would be make sure if it's not a company, and even if it is a company that you're really familiar with, you should make sure the total cost of that transaction is going to be clear. Unfortunately, that is one of the things that's happened here. When you see supply and demand go sort of haywire, and where the demand for funds to run a business is so much higher than the access or supply out there right now, unfortunately, you'll see some instances, if you look hard enough, that really what we would think of as egregious kind of pricing. And so I think it's best advice would just be think about doing business with a company you know and respect. And then secondly, make sure you really know the terms.
I think that is really huge. And I think it's really interesting and tremendously valuable, the system you guys use where it's a percentage of sales, because that was one of my questions about how long does it take, and is there any sort of penalty? And there isn't. So they know what it is up front, and so it's something they can account for. It's something that they can see coming, which I gotta think just makes it so much less stressful. You mentioned, what's the word I'm looking for? Well, venture capitalists and angel investors and things like that are alternative sorts of lending. Do you think there are advantages or disadvantages to going that route?
Well, I think if you're going for sort of a venture capital play, you just, again, that might be more of somebody wanting a share of ownership in your business more than necessarily a borrowing transaction. But there are what the point I was trying to make is there are some other alternative providers out there who are venture capital backed, and so those entities might have a higher cost of funding that because their investors require a higher return for borrowing the money.
Got it. Okay, thanks for that. Yeah, right. They aren't doing it. They're doing it so that they can actually make money and not necessarily have any ownership in the business. They're just
Correct.
investing in.
That's right.
Yeah.
That's right.
Okay. Is it possible for you to share like specific examples of small business owners who were trying to get a small loan from a bank and what they went through? What happened?
Yeah, sure. So there's one, a company called ACS Home and Work, who is they're up in Allendale, Michigan. And I know you're a Michigan State grad. I grew up in Michigan. And this is a fabulous story of a company that really is an American success story in manufacturing. They sell furniture remodeling services, and so they do a lot with fabrics and custom fabrics, and they do a lot of B2B kind of work where if you've got things that if you need custom made for your company, maybe logo material and things like that, they do a lot of things like that. And this was a company who had a lot of expansion opportunities. They'd been in business since I think about 1999, and as the real estate markets really started to take a hit, the business they started to, I guess, really have a little more trouble with sales and access to the working space, and they started using the PayPal Working Capital program shortly after we launched it in 2013, and a gentleman named Ted Parrish is the founder and owner, and he was with me in Washington, D.C. A couple of months ago at the Atlantic Festival telling his story. And what, Ted's words then were like his business has probably doubled in size because of the use of this program, and his staffing. He now employs, I think it's about 24 people, and had grown by about 30% just in the last year. And he's used this program a number of times, but we've got a number of them on our website. Use cases like actual client testimonials, and this has actually probably been the most rewarding part of my career. I was a banker for 20 plus years before I joined PayPal about 8 years ago, and I've literally in all that time never seen a single program that has this sort of emotional pull and adoration from the customers. These are really small business owners who have taken a chance and made the big leap to go out. Sometimes it's to chase a big business dream for growth. Sometimes it's just chasing freedom. And this program has made such a ginormous difference. We've issued more than 500,000 of these loans for more than $6 billion since we launched the program. And in the third quarter alone, as we declared in our third quarter earnings call at PayPal, we funded more than $1 billion to small businesses through these programs.
Wow. I was curious about that. I really appreciate you sharing that, because that was going to be one of my questions. What is the difference? So you worked for a major bank for quite a while, and then you have this experience, and it sounds like it's night and day, the impact that a program like this has as opposed to.
Sure. Yeah, and of course, banks of course are key to their communities. They make great great anchors of their communities, but they can't do everything. And we got into this business back in 2013 because our customers pulled us into it. PayPal has always, not only have we processed for major global large enterprises doing their online sales, but we also have been for the very smallest businesses, those people who might be hobbyists selling a little bit of things here and there, or to the people who are independent full-time businesses and to every size in between. And our customers kind of pulled us in here because that need was so great, and what they were seeing in the marketplace, again, back to that sort of gap in supply and demand, where access was available, it was very, very expensive. And we went into this with sort of a position that we were gonna have a program that worked very fast, flexible, and fair, underscoring fair, because we're a business that does processing as our source, and this is an enhancement to our business that kind of fuels the core business. But it is very different from banking for sure. Again, we're able to based on our processing network, we're able to really know and understand a lot about these businesses. So before they even come in and hit apply, once they've logged in, we have a pretty good sense of what the offer is ultimately going to be. And we, as you would guess, we really surprise people greatly when 3 to 5 minutes into an application process, it's all done and the money is waiting for them if they're so inclined.
Boy, no kidding. And I think it is so interesting. This is what's sort of fascinating me about this, that because it's such a great system, because you have a history with people and you've been able to be in a business relationship with them for so long. You know their history, you know their path, really, and have a pretty good idea of whether they're in a good place to be able to borrow the money, because you're in that relationship with it. It's not a leap of faith necessarily. It's grounded in experience.
It's absolutely grounded in experience and data. And as I tell people sometimes, I would much rather rely on what I observe directly than what somebody self-reports to me. So I know not about the business, because we see it. We as a key business partner and a processor of their sales, helping them run their business and collect their fees, to your point, we know what their business patterns look like and what their cycles look like and how they're doing effectively against others of similar kind of businesses. We could ultimately predict whether a business is gaining share, losing share based on the type of business they're in and the geography that they're in. So yes, I'd much rather go by what I see as opposed to what someone tells me.
Exactly. And I also think it's so interesting and so valuable for the listeners to know that these smaller loans, these 10,000, 50,000, can seem big to the small business owner, but not necessarily the bank. And so the cost of processing it's prohibitive for them, which is part of the reason why, when they're experiencing their local bank and feeling like their local bank is not really available to them or working with them, it's not necessarily because they don't want to, it's because it just doesn't make good business sense for them to pursue and to have to process
That's right.
a lot of really small loans. That's interesting.
That's exactly right. For a bank to collect and validate the sort of information that we're able to digitally observe,
right.
Difference.
Yeah, that's really interesting. I did not know that. I didn't realize it, and I think that's a big part of this, that the small business owner has to understand the reality of the environment we are now in and work it effectively for them. And boy, I mean, this is fascinating to me, this whole way that you're doing this. I just love this connection. It feels sort of, this may sound a little strange, but to me it feels like way back in the day when we had the corner store and the merchant knew the people in the town. So they were willing to let them buy on credit because they knew they were good for it. They knew what their cycles were because there was that sort of relationship. It just feels like a different level of relationship.
Yeah, we think so too. And again, can just have in 30 plus years of things like this, have literally never seen anything like a phenomenon such as this program. And more than 5 years into it now, the program has really worked above and beyond probably all of our dreams and our customers as well.
Yeah, sounds like it. Okay, so if there was, this is always my toughie question because I limit it to one. If there was one thing that you know, like one big tip that you would give a small business owner who's, you know, looking to access capital to grow their business, would it be what we talked about before, or is there something else you would want to share with them?
I think I would. I think in addition to just knowing who the potential providers are and making sure you're clear on the terms, I would. I hope it's PayPal, but even if it's not, I would say if you've got someone processing sales for you electronically, that's probably a good place to start to see if they've got something available as an option for you that you might not have thought of before.
Oh, that's a good point. It does actually lead me to another question, which is, do you think, it feels to me, you said something about, because, you know, when they log in, we pretty much have a feel for, you know, how they're doing and what's going on and how much we are able to provide to them. Do you think a small business owner should, this is going to sound a little strange, borrow exactly what they need, a little more than what they need? If they were offered less than what they thought they need, should they just go ahead because something's better than nothing? How do you make that decision?
I guess the short answer is every situation is different, and every business owner is going to know have a better idea of what their sort of frequency of need is. How frequently are they going to need extra working capital on hand, and is this a once in a great while thing, or is this a relatively normal phenomenon? And if it's a relatively normal phenomenon, it might be that you sort of pad what you need a little bit and take a little more. And if it's a case where, no, this is a rare one-time exception, then there's always a cost associated with credit. So you probably take what you need if you think it is truly a one-time event.
Okay, that's great. Thank you. This is really, I'm so glad that I have had the opportunity to learn about this and share this with the listeners, because it feels like a game changer to me. Will you share with the listeners, you know, how they can find you, how they can find out about the program, you know, anything you feel like they should know, please?
Sure. And thank you. So we have, in addition to the product just for members, PayPal Working Capital, the one that starts with a login, we also have a product that's a PayPal business loan, where we do some of that traditional underwriting, where we have a human being involved in the process to kind of look over the applications. And so that might be either for a much larger transaction or for a case where maybe you don't have an established PayPal account and you're just going to establish one and you want to use the working capital later, but you could start with a PayPal business loan that we underwrite with a more structured repayment. And you can find out about either of those products at paypal.com, and you'll find a business tab. So when you're on paypal.com, you'll see either for your business or consumer, personal. And if you choose the business tab, you'll gain access to our lending products, PayPal Working Capital and PayPal Business Loan.
Wonderful. Wow, thank you. Thank you so much for joining me today. I really appreciate the information.
All right, Diane, it was an absolute pleasure.
I'd like to thank my listeners and sponsors. Listeners, you're who we're doing this for. To get your free trial of audible.com and a free audiobook, just go to audibletrial.com/businessgrowth to sign up. Call 877-RING-BOOST or visit ringboost.com to get your very own vanity phone number today. As always, continue to prosper and be curious. And until we meet again on another episode of Accelerate Your Business Growth, goodbye and good day.
I asked my doctor to write a note saying I suffer from cabin fever so I could write off my summer vacation as a medical expense. She said no. Fortunately, Red Roof's clean, comfortable rooms are very affordable, and you wake up rested and ready to hit the road again. And get this, when you rest and repeat at Red Roof this summer, staying 2 separate times can earn you a free night. Cure your cabin fever at redroof.com.
Welcome, change agents, to your go-to place for stories that ignite your spirit, fuel your purpose, and connect us all. We believe in the incredible power of the human spirit, its boundless resilience, and the inspiration it brings to our lives. On the Driving Change podcast, we'll journey together through the extraordinary yet very relatable experiences of some of the most amazing people on earth. Our mission? That through these stories, we might just spark change within you and awaken a newfound motivation to harness your unique gifts to make a real difference in the world. So get ready to be inspired and join us on this incredible adventure. You can find the Driving Change podcast on Apple Podcasts, Spotify, iHeartRadio, or wherever you love listening to your favorite podcasts.